Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 20th of April. Right, got a little bit lost there over the Easter break, but back online now. Just having a look here, like the US equity markets, had a great day, up 2%. Now, you got to understand what's happening here, right? The overriding theme that hangs over the market is the Fed talking up the prospects of higher interest rates, all these sorts of things. Until Jerome Powell says something different, doesn't really matter what the other officials say. Now, I know we're in the earnings season and there's a few firms that have come out and posted great results. Yeah, whoop-de-doo, right? It's the reality is they're in a cycle of raising interest rates aggressively. Now, if you look at the general news and things going around, the Wall Street advances on earnings optimism. Okay, that's great, of course. Strong company earnings gives a positive result. Netflix got belted though. Dovish rate rise remarks. Now, this is where the news services can get somewhat distracted and make the story fit the picture. Now, I think Bullard, let me just go into the story here. Bullard came out and was talking up interest rates, get them up to 3.5%. And where was that? St. Louis, there it is there. Federal Reserve Bank president. He's got a lot of pull. But then there's a couple of other ponies. Chicago Fed President Charles Evans and Atlanta Federal Reserve Raphael Bostic offered more dovish comments. Now, to say that they're a bit better or worse than the others, it's like the market's cherry picking. What I'm saying is that there's been a strong earnings day. Equities have rallied. That's what's happened. I think they're trying to paint a picture here that, and there's always fracture within the Fed or any central bank, and that makes the discussion around raising interest rates or policy changes positive. If everyone was the same way, we'd be at 20% already. So anyway, I think the news here doesn't really fit the picture. Okay, we've got some good earnings from companies, US equities rally. I think if anything, it's a relief rally, right, than anything else. The dollar at this stage is going to rally until the cows come home or until Jerome Powell says, okay, we're done, right? So you need to be sort of focusing on a few different things. Coming into the third week of the month, now the dollar index up. Just going through the global markets here, euro down, sort of massive, or not a massive, but gold get hammered. It's gone through that resistance line or support line, I should say. So is it going to go again? Well, it's come a long way. What, $25, $27, $28? It's hard to say, but I tell you, it's under pressure, and you can see that resistance or that trend line is behaving exceptionally well. So it's in play. Oil, well, it's just all over the place. We had that sort of rally over Easter, now back to 102. It's whipping around. It's whipping around like the currencies, and it's getting a lot more attraction because a lot more people are trading it because of the volatility, right? So don't be too worried about that. The equity markets, Nasdaq and S&P, well, as I said, bit of a relief rally in my eyes. This doesn't change the interest rate perception of what's going to happen in the US. Bitcoin, now I'll show you the cryptos here in a second. Bitcoin's up. I think there's a bit of a pretty positive relationship or correlation with cryptos and the equity markets, right? They seem to be working in tandem at the moment. And you got the commodity index, which is, as we know, Aussie, Kiwi, CAD, commodity currencies, that's hanging in there as well. So across the board, the overriding theme here is across just about all these things is the dollar is going up. Now, if we have a quick look across the currencies, obviously the euro, dollar Swiss, I was saying this before, it's playing catch up and then really kicking some goals with euro under pressure. We've had these clean outs, like the Easter clean outs, right, where euro rallied above resistance, sterling smashed all the traders out. Now they're back in the groove. The key part is, to me, Aussie, Kiwi, euro, sterling all behaving the same, and dollar yen. Dollar yen's set to go back to where it was in the mid-90s, right, up towards 160. So don't think that's an unusual number. That's where it should be, right? The US economy against the Japanese economy, it always should be 160. I don't even know what it was doing around 100, but that's where it's heading at this stage. And if you don't think it's going to get there, I can tell you when it starts to run, it will really go. Now, are we going to see the BOJ? I don't think so. They're out of cash. They have been since like the late 90s. They ran out of cash. Maybe they'll come in and do some jawboning if it gets up to some other levels, but they'd be loving it, right? Makes them more competitive globally. So that's a really good thing. They don't have to do anything. If it's under pressure down around 100 or 90, that's when they usually start talking. dollar CAD, even with oil sort of whipping around all over the place, it is technically in a sort of tight range. Looks like it wants to bust out, but with the strong dollar perception, the oil which is moving around, then you've got the CAD data on top. It's once again the loonie is proving to be a little bit tricky on that front. Now, if I just go into the equities, it's just a quick look here. As I said, they're all pretty much behave the same. They are all sort of mid-range. FTSE still hanging on to those gains they had from March, okay, sideways through April. Australian Lords also looking like they want to go up, but it's like we're missing the picture here. Like just about all the central banks are ready to be aggressive with interest rates. If interest rates get over 10%, I mean, the Fed can't sort of keep saying, oh, this is the top, this is the top, this is the top. It might be the top when we get to 20%, but they've got to do something before then, right? The volatility index is quite low. It's come back. So the market seems very comfortable with everything that's going on. Everything that's been factored into the market is now going, yeah, this is sort of almost normal market conditions. Very little news about the Russian-Ukraine situation. As I said, that's now a non-event. And the other equity markets sort of just hanging in there sideways. But to me, you've got to be thinking they're going to go down. The cryptos, well, I'll just give you the top ones. You got Bitcoin, as I said, just coming back. Now, I've overlaid the US equity markets here, the S&P 500 here. You can see, I mean, there's obviously gaps where the S&P market's closing, but it is correlating somewhat positively with the crypto. So if you are trading cryptos, keep an eye on that, because that could be something that could be one of the key drivers that is developing as a real thing, right? But as we go through the markets, you have a look at what's going on, and we're seeing, once again, these things are trading really well, and as a group, right? That's what I like about it. There's no fundamentals to really screw things up. So that's where we are. So coming back to after the Easter break, what's going on? You see some currencies moving. You've got to wait for the setup to sort of fit the picture. Now, whether you're trading, commodities, equities, or equity indices, cryptos, Forex, wait for the technical setup to fit into place, understand what's going on. We do have some key data coming out, which is going to be important to the whole picture. Looking at the inflation numbers here out of Canada, obviously a key component, like the Fed are talking interest rates, Bank of Canada, they will move aggressively if they need to. So keep an eye on these numbers. And these numbers here, once again, like the US numbers, are edging up. Year on year, 5.7, and the Bank of Canada core number, even 4.8. Like in the past, let me give you a bit of an idea. Once it got over 3%, they would be hiking aggressively to stop inflation going. Now, even the Bank of Canada has let it go probably too far. So strong numbers there. You're going to see the CAD rally, push dollar CAD down. We'll see how that plays out. You've also got some CPI numbers here coming up tomorrow out of New Zealand, and then a bunch of, well, the CPI sort of all over the place. So we've got a few things, but just I don't want to get too far ahead of yourself. Keep an eye on the CAD numbers, probably most importantly. Industrial production numbers there out of the Eurozone. Like it all fits a picture. We've got direction. We've got strong dollar, Euro, Sterling, Aussie, Kiwi trending down. So you look for opportunities where momentum will come into the market and support those moves. That's probably the easiest trade, right? As the market comes back online after the Easter break, you really want to have a look around and see where everything is. If I just come back to the risk on, risk off profile, and make sure, as I said, the theme connects. Okay, strong equities. Okay, that's great. That's a risk on profile. During that North American session, is that going to change during the course of the day? We'll keep an eye on the US equity futures through the Asian session and the start of the European session. See if that changes. At the moment, looks like all currencies are rallying, not just the dollar block. Commodities, well, they're not doing too much. Don't forget all these numbers reset about 3 or 4 hours ago. And the safe havens doesn't seem to be much going on there as well. A bit of an unwind of the safe havens for sure. All right, guys, that's it from me. I'm just trying to give you some direction here where the moves have come. This is a big relief to a lot of equity traders or people holding equities. I think it's going to be short-lived because you can't deny this plan that's been evolving from the Fed about higher interest rates and how aggressive they've got to be is not changing anytime soon, right? And so until that changes, the equities are sort of one day away from getting another hammering, right? We'll see how it plays out. All right, guys, take it easy. All the best. Cheerio.